Good morning, good afternoon to the hundreds of participants that I see connected to this 11th webinar from our webinar series Ctrl Alt Delete Green Rebuild that the IFC, the International Finance Corporation of the World Bank Group, has launched a couple of months ago as one of our responses to the current COVID crisis, as we want to share with you a call to action, especially to the financial sector, for a green reconstruction, or better say, for a green construction, once that the world is able to move from the current emergency situation to the subsequent phase. I am delighted to welcome you. My name is Carlos Serrano. I am the program manager for the IFC Green Banking Academy, which is the knowledge and capacity building initiative that our climate finance team has placed to support the transformational journey of banks and financial institutions from business as usual to responsible banking, aligned with the Sustainable Development Goals, and particularly with its climate-related targets. From the IFC Green Banking Academy, we provide to banks green training, green consultancy services, and of course, our core business, which is green financing. Why we have branded this webinar series as Ctrl Alt Delete Green Rebuild? Control, because if we move and we act, we can control the future of the world we all like to live in. Alt, because we trust that there are better alternatives for channeling the financing flows and for building a more sustainable society. And is Delete because we shall erase the mistakes that we did in the past to avoid them in the future. In summary, we are proposing a green rebuild. Today, we have an interesting webinar and fantastic panelists from Mexico, Colombia, and Spain, and a fundamental topic for discussion: the key role of central banks and regulators in greening the financial system to facilitate the main source of financing today in emerging market, which is the banking sector, and how we can move to green. The call to action of today's webinar is the importance of developing a clear sustainable finance strategy and the creation of local standards, such as green taxonomy that follows international standards, to accelerate and give certainty to the development of sustainable markets, where banks and other financial institutions can grow their green portfolios, tackle climate risk, and contribute to that green rebuild that we are proposing. Let me share with you some logistics about this session. In terms of schedule, we are going to have 50 minutes discussion with our panelists, and the panel will be led by our today's moderator, our colleague Luis Gardiner from the SBN, which is the Sustainable Banking Network. Our distinguished guest will give opening remarks, followed by a time of 20 minutes for question and answer from our moderator and from all of you participants in this webinar. So I ask you, our audience, to please post your questions in the question and answer chat that is available on the right side of your screen. We will also appreciate if you can please take a few seconds at the end of the webinar to help us to improve by completing just 4 questions online survey that you will see on the screen. So thank you very much for that. And without further ado, let me introduce our great moderator today, Luis Gardiner. Luis is Africa Region and Working Groups Coordinator for the IFC-facilitated SBN Sustainable Banking Network. Luis joined IFC in 2005 in the Environmental and Social Department. Luis has been part of the SBN Secretariat since 2012, and in addition to coordinating the various SBN working groups, she's also involved in IFC country-level support to South Africa National Treasury in its sustainable finance roadmap and the development of first green finance taxonomy. Luis prepared IFC 2005 sustainability report and was part of the core team for IFC first integrated annual reports in 2007 and 2008. She has led advisory work for IFC clients on sustainability reporting, including a 2-year partnership with the Global Reporting Initiative GRI. And she has participated in innovative research on the link between sustainability and financial performance on IFC's investment portfolio. Since 2010, she has consulted globally for IFC on projects supporting private and public sector initiatives in sustainability disclosure, clean finance, and responsible investment in Africa, Asia, and Latin America. She is no doubt an experienced stakeholder, engagement practitioner, and trainer. Luis, the floor is yours. Thank you.
Carlos, thank you very much for that introduction. It's a real honor to be moderating today, and always good to collaborate with you and with Marcela Pons, who's been a champion for the Sustainable Banking Network in Latin America. It's really exciting to be part of this discussion, which showcases the innovation and leadership in 2 Latin American countries that are members of the Sustainable Banking Network. That's Mexico and Colombia. And just to give you a sense, the Mexican Association of Bankers joined the Sustainable Banking Network in 2016. And the SFC represented today, the Financial Superintendency of Colombia, joined in 2018. To tell you a little bit about the Sustainable Banking Network, it was established in 2012 when financial sector regulators and banking associations from 10 countries invited IFC to establish a learning platform. And what they were finding is that these 10 leading countries had started to make efforts. I think the started, you could say, it was 2009, 2010, realized that they needed to shift their markets to more sustainable finance practices. And by that, they meant building a basis of environmental and social risk management by financial institutions so that the externalized risks that were not being accounted for within banks' operations could be incorporated into decision-making, and to adopt and develop leading standards in how to do that. So the risk management, addressing financial stability issues, and then also the emerging opportunities in terms of green finance and sustainability-focused finance. And we've seen that component really take off in the past decade, particularly with the emergence of green bonds. I think many of you will have seen that green bond issuance is climbing exponentially. And recently, we've started to see social and sustainability bonds and sustainability-linked loans coming into the market. So we're seeing that banks are very excited to innovate. But it's so important for all of these initiatives to have a level playing field and a framework provided by regulators. And that's what we hear again and again, is that to kickstart this kind of transformation at a market level, you really need leadership from the regulators. And so it's extremely exciting to be hearing today from 2 central banks and a superintendents to hear how they are championing these journeys. The Sustainable Banking Network has grown. It now has 55 member institutions. As I said, it's a combination of regulators and banking associations. So we facilitate dialogue between the private sector and the public sector, which is one of the really powerful tools that we're using to bring about transformation. We now represent also 40 countries, and that's countries only in emerging markets. So unfortunately, the Central Bank of Spain is not a member, although we are participating in the network for greening the financial system, and that's where we're bringing the emerging markets perspective to this global dialogue. Our members account for over $43 trillion in assets under management in the banking sector in emerging markets. So this is a huge amount of assets to influence. But coming to the themes for today's discussion, the reason why SBN grew so quickly and has been so successful is that the contribution of the members is through the knowledge that they share with each other. And it was this desire to share knowledge, to collaborate, to quickly transfer lessons learned, and to also collaborate on common approaches, which has made SBN so successful. And my role as working groups coordinator, I have the privilege of working with members in several working groups. We have a measurement working group, which helps to benchmark and see a systematic roadmap that countries develop. We also have a green bonds working group where we've helped countries to quickly upskill in terms of common approaches to launching green bond frameworks. And we recently launched a very important report on how IDA or low-income countries are responding to sustainable finance. And I think speaking to this time of COVID and crisis, we have been so inspired by the fact that our members have not stopped on their journeys. We have seen many of our members coming forward with new policies, new regulations, and pushing this agenda forward because they realize it is so important for rebuilding our economies. So with those points, I just want to highlight three takeaways, which I think are going to come up again and again in today's discussion. The importance of the leadership by the regulator in driving the roadmaps for sustainable finance, setting a common vision for the market and moving the market towards that vision through enabling frameworks. The importance of standards. As markets mature on green finance, they develop more technical standards to provide clarity to the market players and unlock green capital. And then collaboration, which is so critical between the public and the private sector and between different parts of the financial sector. So with that, I'm very excited to introduce our speakers. We have 3 speakers today. We have José Manuel Marquez, head of the Financial Innovation Division at the Central Bank of Spain. We have Dr. Rafael del Villar, Chief Advisor to the Governor of the Central Bank of Mexico. And we have Ms. Mariana Escobar, who's the Sustainable Finance Group Head and Advisor to the Superintendent of Colombia at the Financial Superintendents of Colombia. And so to kick things off, I'm going to invite José Manuel Marquez to speak to us. A bit of background on Mr. Marquez. He is the head of the Financial Innovation Division, Bank of Spain. In this position, he focuses on studying the main trends transforming the financial system and defines the main implications for the central bank. Prior to this position, he has been head of the International Financial Markets Division and held a number of different jobs within the bank since joining in 1996. He has written a number of articles on financial markets, regulations, and financial stability, macro finance and asset pricing, the real estate sector, fiscal, public policy, and regularly contributes to the Economic Bulletin of the Bank of Spain. He has a BA in Economics and Business from the University of Zaragoza and an MSc from the University of Pompeu Fabra in Barcelona. José Manuel, I have the privilege of handing the microphone to you.
Thanks, Luis. Thanks, everyone. And first of all, I would like to thank the IFC and the Sustainable Banking Network for all the work that you are doing in promoting and explaining and make this joint effort in order to try to build and explore the economic through the finance into a more sustainable economy and a more sustainable world. And in particular for organizing this very interesting panel, and I share that we will have interesting questions and hopefully interesting answers also. I would like to begin by making some reflection on how this topic on sustainable finance has changed in the last 2 years in the central bank. But it's at the beginning of the Bank of Spain. I participated in some discussion in the group created by the G20, and the big step in 2015. But this climate risk is a topic that has been discussed only like a niche economies inside of central bank. And when you talk with someone in the central bank, usually they ask, okay, why should central bank worry about climate risk? This is one issue for fiscal authorities or for other authorities, but clearly it's not an issue in central bank. And you have to try to combine saying that central bank will have to say something on that. Things begin to change and begin to be one of the regular topics, usually dealing with high-level discussion of governors and this kind of topics that begin to be discussed in order to see if there is something that will be important. After that, you begin to see that in some areas, central bank begin to take some action. For example, in portfolio management or regulation. And the situation nowadays is seeing that basically climate risk is one topic that is included in all the committees, in all the programs of the committees of central bank, from supervision, to regulation, even to payment infrastructure. It's almost in all the committees you will have some part that is dedicated to climate risk and how to change this area of central bank. Then I can say that basically it's in all the fronts, in all the the main tasks developed by central banks, how to adequate and how to take into account climate risk in the areas where central banks are working. In Europe, in particular, all this process has been joined, has been pushed by a decisive policy action from the European Commission. As all you know, after in the recovery after the pandemic, the greening the society and green initiatives is one of the key pillars together with the digital transformation and the social coverage of the European Commission. But before that, the European Commission launched an action plan on green finance that includes 4 steps. First one is a list of sustainable activities, what is usually called a taxonomy. The second pillar is disclosure obligation. The third one is obligation to invest in sustainable investment. And the last one is a list of bond activity. The 2 first pillars have been more or less developed. It's in a medium-term development and will be implemented by 2022. Then what is a sustainable activity from a European perspective? But it's basically one activity. It's an activity, it's not an industry. And it's an activity that contributes to environmental targets. There are 6 environmental targets. 2 of them have been fully developed. But they include climate risk, include pollution, include water resources, include circular economy. Not only has to contribute to an environmental target, but has not to produce any kind of prejudice to the other objectives, and also has to keep some minimum social guarantee. The use of this taxonomy will be used in terms of disclosure from the financial market participants, but also for big companies in order to perform the non-financial reporting. And also when we develop some national or European rules related with some financial products like green bonds. Of course, there are some pending issues that will be important, for example, how to include sovereigns or the gold taxonomy that will take at a later stage. But this is an important issue that will have important consequences. And what will be the consequences for central banks? There are several consequences that we are already facing in central banks. The first one is with our portfolio, mainly with the portfolio on non-monetary portfolio, because this taxonomy and this disclosure will be useful in order to take into account how to allocate our own portfolio in the central bank. Of course, the fact that the sovereign bonds has not been included in the taxonomy is an important gap, because most of the portfolio of central banks is composed by sovereign bonds. But at least we have some framework where we can decide which product we will allocate. But also the disclosure and non-financial reporting will be helpful in several ways in order to take into account climate risk in the financial sector and take into account with a micro-prudential perspective from the banking sector. This will be of great importance, because if we don't have this kind of data, it's very difficult to take this assessment of the risks from the financial sector, but also from the financial stability perspective, and in order to develop a macro-prudential exercise like the first step on climate risk, it's important to have this data from the disclosure initiative.
Jose Manuel.
Yeah.
Sorry to interrupt you. I was wondering if perhaps if you can move a little bit the microphone in order to improve a little bit the sound quality, because I don't know if you have an option to get it closer or to.
Okay.
To see if we improve a little bit the sound quality, because there is some. So.
Okay, now not yet.
Try.
Can you hear me now?
Yes.
Yeah. Is it possible now? Yeah.
I think it's better. Don't you think so, Luis? It's better, no?
I agree. That does sound clearer. Thank you, Jose.
Okay. Thank you, Jose. I'm sorry for the interruption.
Okay. Okay, no, thanks. It's better that you can hear me, of course. I was mentioned that from a central bank perspective, it's important for the investment portfolio. The second one is this disclosure will be important in order to take into account climate risk from a microprudential perspective, but also from a macroprudential side in order to develop a stress test. And the last issue that I want to mention is because it will be important in order to take into account the risk taken by the central bank, for example, when they decided the haircut used in the monetary policy implementation, and in order to know what is the risk of this collateral that has been taken by the central bank. Then all these initiatives are absolutely critical in order to develop more implication from central banks in green finance and more implication in implementing this sustainability inside of our activity. Of course, there are many areas where we have still to work hard, and we are far from developing it. One is from the economic models, in order to take into account the second round effects in the economy, like for example, developing some kind of integrating assessment model. The other one is more expertise on physical risk. I think that we have still to perform more work on this area. And the last one I would like to mention is to improve the education and the partnership with the industry in order to help them how to analyze and how to interpret climate risk. We have to be more used, and we are working on that, to deal with partners that are not usual and partners for central bank, like for example, NGO organizations or the World Wide Fund or this kind of association. And this is one area that we have been working at. And in the future, I see that we have to work more on this area. And I will stop here, and very happy to answer any questions.
Thank you very much, Jose Manuel. I think we will hold most of the questions until the Q&A. I think you've given us a really great introduction into how important this issue has become for central banks. So we're also seeing that in places like South Africa, where the central bank has recently issued a paper on the systemic risks related to climate risk and the role of a central bank. So we're seeing very quickly central banks are upscaling and taking a proactive approach to climate risk. And then also the impact that's being had through the European Union Sustainable Finance Action Plan. It was introduced just recently, the last few years, and then the issuing of the taxonomy, which is going to provide clarity for all players in the marketplace, not just in terms of issuing bonds, but in analyzing portfolios and understanding how to treat different types of green finance and different types of projects. So we're seeing that this example set by the European Union is already having massive impacts in the emerging markets, where instead of reinventing the wheel, it provides a basis for SBN members, which we're seeing is happening quite quickly, just simply to do a gap analysis to see what is the gap with what the EU has proposed, what standards have been developed by the EU that can simply be copy and pasted or adapted to a different context. So we're very excited to see that conversation taking shape. So we're going to move on now to Dr. Rafael Del Villar, who's going to present the vision of the Central Bank of Mexico. And to give you a bit of background on Dr. Del Villar, he is an economist from the Autonomous Technological Institute of Mexico, ITAM, and has a PhD from the University of Pennsylvania. He has been a professor of economics at the Texas University, A&M, and at ITAM, where he was also director of the Center for Studies in Competitiveness. Dr. Del Villar's specialty is the design and implementation of microeconomic policy and regulation in areas such as competition, telecommunications, finance, and recently green finance. He took part in drafting Mexico's first law governing competition and was managing director for economic studies at the Federal Competition Commission. He also drafted Mexico's telecommunications law and served as Undersecretary of Communications and Commissioner at the Federal Telecommunications Commission. Most importantly for today, he is now serving as advisor to the governor of the Central Bank of Mexico. He is building awareness of the climate and environmental risks that stand to impact the country's financial system. He is leading discussions on the need for tools and methodologies for climate finance. In the network of central banks and supervisors for greening the financial system, he leads the Market Dynamics Group. He also participated in the G20's Green Finance Study Group from 2016 to 2018. I'm very excited to hand over the microphone to Dr. Del Villar.
Well, thank you very, very much, Luis. It's an honor to be with you today. And we are a big supporter of the Sustainable Banking Network. And Mariana can attest to that in the NGFS Market Dynamics group in which Mariana and myself participate. Very much also trying to bring in, on the questions that emerging markets have and the issues that they face in bringing, this concept of green finance. And this green finance, and I want to dwell a little bit on this, is very relevant for the real economy. In 2018, just at the beginning of the network for greening the financial system, this is a central banks and supervisors network, a very small statement was made which says that climate change is a financial risk. And that is exactly the reason why central banks are involved in this agenda. Namely, central banks were, entitled to looking at precisely how the financial system should be more stable, should be more resilient to the future events that are shaping, that are dramatically affecting or likely to affect the financial system, such as physical and transition risks. So, but we at the central bank in Mexico, we are not only looking at the risk side and the methodologies, the tools, but we have to go hand in hand with private financial actors, with the financial entities in the country, with them hand in hand to develop awareness, and therefore it's wonderful the work that the IFC through the SBN is doing in the Green Banking Academy, but also because it helps financial institutions develop this to understand, to be conscious about the relevance of the issues that we are facing, and so that is something that I wanted to say. Now it's still was quite surprising in a report, a very in-depth report that we published only last May, that that was done through individual interviews with the heads of the financial institutions in Mexico, over 60 institutions in the country, in which we realized that there are some key elements for improvement. And for instance, we realized that this is of course is very clearly documented in the report. This is a UN Banco de Mexico report. You can find it in our website, and that there was, say, for instance, on the very important disclosure initiatives that exist, that there was little awareness on these initiatives in the country. So we are the central banks also sort of, as Mark Carney has mentioned, sort of evangelizing. We are saying to the financial institutions, go and understand the risks that you're facing. Go and understand the opportunities that you're facing with the changes, with the transition that the economies will experience towards a better future, a lower pollution future. And we have to do this because the impact of climate, environmental, social risks are still not very well understood. The impact of green opportunities and technologies are also not well understood in the financial industry. And actors are not internalizing negative environmental externalities. And this means that we are facing a situation in which assets in the economy are not well priced. This is even the case of so-called well-known technologies or brown assets. The reason being for this is that there is not sufficient collection of data, and particularly and to a certain extent the lending decisions from legacy technologies are done on backward-looking data instead of looking at the potential of such technologies for the future. So we are in a midst of a capacity building environment in Mexico, in which we want the financial institutions to really go ahead and understand these transition risks that are facing. We acknowledge that physical risks, and Mexico is subject to significant physical risks, are better understood by insurance companies, and but these forward-looking technologies that and these transition risks that I mentioned are very significant elements of risk going forward. And to understand this, it is important, and we are looking into private-led, a lot of very important private-led initiatives towards environmental and climate-related disclosures. I just mentioned, of course, the Task Force on Climate-Related Financial Disclosures is one, but there are there are other initiatives very, very important, and there is a new task force for nature-related financial disclosures that is also set to be launched in 2021. And this will also provide a reporting framework to disclose finance sector impacts and dependencies, but on nature. So this is something that is a disclosure reporting is fundamental. And this goes, of course, hand in hand with what Luis and Carlos Serrano and I think Jose Manuel also mentioned on this common language of classification. No? What are we talking about when we how do we define certain activities, the impact of certain activities. And this very important language, which we call taxonomy or green taxonomy, is at the center. Just very quickly, when we think of banks, for instance, and bank relations with clients, even though they entail short-term or medium-term loans, these bank relations with clients, for instance, are a longer term. They tend to be stable. And therefore it's this bank relations with clients, with corporates. Banks do have a stake in making the client, the corporate, take long-term decisions and that are sustainable. And I think we are moving into this. Environment in which we recognize these long-term relations. We are also understanding ever more that institutional investors, this very large institution, some of them very large institutional investors, that their capacity to diversify out of systemic risks is limited, and therefore they are also having a necessity to look into avoiding this, as I mentioned, systemic risks that there are, no? And so we see these financial agents as actively using their influence to accelerate transition to a more environmental friendly business practices within the corporate sector. And I think that is something that is very, very interesting. And international institutions, Carlos Serrano mentioned the standards, are also a very important player, no? And I just want to mention in this respect, the climate impact reporting draft international standard, ISO 14097, that on climate change to take into effect in 2021, which aims to create, a standard for assessing and reporting investments in financial activities. So we are moving, the financial system globally is moving, and us at Banco de Mexico are supporting this arrangement. And in order to be able to do that in an effective way, the Council for Financial Stability at the end of March in Mexico decided to create within this Financial Stability Council, which is headed by the heads of the Finance Ministry and the central bank, decided to to a Sustainable Finance Committee, which is really an inter-financial authorities committee in which private leaders of the private finance are going to be invited, the Mexican Banking Association, for instance, the Insurance Association, the Pension Fund Association, and to work together hand by hand in developing this agenda and going forward. So thank you very much, Luis.
Thank you very much. That was a very insightful coverage of the convergence that we're seeing globally. And I think you've touched on what to the viewers may seem like different pieces, in this whole big puzzle, but it's all coming together very quickly, I think. We're starting to see this in different domains. You touched on a few interesting things, including disclosure. And we know that things like environmental and social disclosure have been around for almost 20 years with initiatives like the Global Reporting Initiative. But it's only in the last few years that initiatives like the Task Force for Climate-Related Financial Disclosures really pushed this to a new place. So it's not so much that the topics that might be covered by reporting have changed, because the climate, environment, society, it was there. But what was missing was the urgency to deal with this at a governance level and to explain how our institutions are preparing themselves for these risks. I think that's where the TCFD has really made a fabulous shift and now gives information that can be used by regulators to assess the market level risk. So that's been a very exciting convergence. We've also seen the increasing role of institutional investors in places like South Africa, and the difficulty that institutional investors have if the terms and classifications that they are using to assess their risks and opportunities aren't the same as what the financial institutions or the asset managers are using, then it's hard to get an overall picture of both the risks and opportunities. And so that brings me to the other point you made around standardization. With the Sustainable Banking Network, early on, we made it very clear that each market has its own characteristics, and therefore you have to respect that in developing frameworks. But what we've actually heard from our members is the need for standardization and convergence so that we're all speaking a common language. So thank you very much for connecting those various dots. And now I want to move to Ms. Mariana Escobar, who's advisor to the Financial Superintendent of Colombia. Mariana she joined the SFC in 2018 to support the design and innovation strategy of the SFC. Before working at the SFC, Mariana served as a Deputy Director of Postal Affairs at the Ministry of Information and Communication Technology at Colombia, and as an advisor on inclusion at the Department of Social Prosperity. She also worked at City Colombia as Sustainability Manager and representative of City Foundation in Colombia. She holds a master's degree in international relations from Bentley University and a master in international affairs and development from Columbia University. Mariana, I hand over to you. Thank you.
Thank you, Luis, for that. Please let me know if my voice comes up, because I always have connecting internet issues. So please let me know.
We can hear you.
In any cases. Okay.
Thank you so loud and clear.
Perfect. So before I start, I just wanted to explain two fundamental aspects, explain and understand the work that the Superintendencia is doing and how it can differ from what a central bank can or are willing or able to do. So the first aspect is that the Superintendencia Financiera, its arrangement is not sectoral. We are an integrated supervisory authority, so we supervise not only banks and insurance companies, but we also have our under umbrella pension fund administrators and other markets, capital market participants. So we have the whole view, and in that sense, it gives us a lot of space to manage and to act and to signal the market in a coherent and organized way. The second aspect that I think it's also very important to understand, and that it may differ from certain central bank mandate, is that the Superintendencia is not implemented to implement policy initiatives to promote market development. So we still have, we're able to have certain, again, initiatives that can lead the Colombian market into a more robust and fair market. So in that sense, we can also differ from most, I think, central banks. Having said that, I'm just gonna explain a little bit the history on how we ended up with a sustainable finance strategy. In 2000, around in Colombia, and before that, the years before that, we started to see a surge in the Colombian market on green bond issues. And it was not led by a sovereign bond issuance. It was led by the private sector and the development banks in the country. And one of the things when we spoke to these issuers that was highlighted by them is that the issuance of recourse not only helped them gain reputational notoriety around environmental and social issues, but it also helped them diversify the investor base. So, at the superintendency, one of the first questions we asked ourselves was, how can we help develop that market? You know, what can we do in order to foster and encourage other issuers to go towards this type of issuance? When we stopped and took a look, the first thing we did was to actually join the Sustainable Banking Network. I think it for us was very important to be able to understand what other supervisors in emerging markets were doing. We already knew what the private sector was doing here, but we wanted to see and hear what other supervisors from similar markets were doing and their counterparts in the private sector were doing. After we joined the Sustainable Banking Network, we decided to actually develop a strategy, but that strategy was not only going to cover opportunities, was also going to cover risks. So we set up two big or main objectives. The first one was related to finance, actually, obviously, and how we could promote or increase the level of financial flows into sustainable development priorities. And the second was related to risk and how we could help financial service approach and address ESG and climate-related financial risks. Here, it's very important for us to make that focus on climate-related financial risk, and I think it's related to what you mentioned regarding TCFD. In the Colombian market, the private sector was already advancing, especially the banks. They were really the biggest banks in Colombia were already aligned, if not signatories, with the Ecuador principles. We had in Colombia a voluntary initiative called the Green Protocol, but they were talking about traditional approach or the approach that we have seen for the past 15 years regarding the environmental and social risk management systems and how their loans and the companies they were financing were impacting the society or were impacting society and labor issues and community issues and the environment. But what we also decided to do was to take the discussion actually to the next level and start talking about this approach that the TCFD presented regarding how climate change specifically is affecting their strategy and how it affects their business. So with these two big objectives, we knew that we had to start doing something, but we knew we had to respond to two big or two very important principles. The first one was graduality. And here I'm going to take some of the ideas that Rafael presented regarding capacity in the financial system and in the frames we supervise. So we knew it has to be gradual. We knew we to start by giving policy signaling, not starting with regulation or very stringent instructions on what they should do, but just starting to send to. We knew we needed to start by sending signaling, soft-signaling. The second principle that we also thought was very important for us was proportionality, and to hear as the market in Colombia, you know, how whatever was happening in other countries, especially in Europe, had to be adapted and proportionate to what the Colombian context and economy and the financial sector, you know, it has to respond to that context. So those were the principles. So what we decided to do in order to respond and to align with those two principles was to first, and I think here it's the same that Rafael mentioned that they did. I think Chile did the same, and even the UK did, was to send a survey. With that survey, we kind of got a sense of how the market was responded. We immediately, what we already knew, that the banks were ahead, but the institutional investors were a little bit behind. Besides having an overview, again, this survey helped us introduce new concepts into the market, or concepts we needed them to start understanding, like climate risk, physical transition risks. We saw this survey as an opportunity to what I called start doing some inception into the financial firms. After we launched this survey, we decided to obviously start closing what we believe were not close, developing or paving for a more sustainable, or paving the road for the necessary conditions to have a more sustainable financial system. So we knew and we had to work things, and most of these things were clear, where it's information and things we kind of captured through the survey. So the first one was around definitions, and here's where the taxonomy plays a role. One of the things that was mentioned during the survey was for us financial firms and the firms we supervised, what they said to us was, in order for us to really take advantage of the opportunities that climate change and environmental issues bring to the table, we need a common definition. We need to understand what's going on, what's not. You need to help us. So we knew that we had to start working with other government entities, obviously, because this has to be a national initiative. It's not something that to the financial sector should be different to what it's doing for the Ministry of. No? So we knew we needed to work with the other government entities to start developing this taxonomy that again responded to the Colombian context. No, it cannot be something that you take from other jurisdiction. Obviously, you need to keep the architecture, you need to keep the principles, but you need to adjust it to the local context. So that was the first thing we knew we needed to do to pave that road. The second one was around data. Again, I think this is something that always comes up. Rafael mentioned it also. We knew, even though in Colombia we have a lot of sustainability reports, I think Colombia is the 5th country with most sustainability reports under the GRI. As you mentioned, it's something that's been in the market for maybe, at least in Colombia, it's been common and popular around 10 years, 12 years. And issuers have been developing their own sustainability reports, but we know that since and how the GRI works, in the sense that they can define what is material to them or not, it's very hard for institutional investors to really first compare the data, because not all the firms under the same industry publish the same data, and second, they cannot assure the quality. The GRI reports, it depends on the commitment of each issuer, whether they use external, a second opinion or external verification in order to assess the quality of the information. So in that sense, we the private sector and the disclosure the private sector was having around the risk and opportunities derived from environmental issues. The third aspect that we needed to work was, and in that sense, we're working actually, just to start closing, working on how to standardize certain information, because we think it's very important. The third issue was around capacity building. As I mentioned before, one of the things we saw in the survey was that certain firms were behind compared to certain sectors within the financial sector were behind, or certain activities were behind. So we needed to level up the game and kind of put everybody in the same on the same knowledge and level. So we decided to start developing good guidelines, good practices guidelines, and we launched last week for public commentary the guidelines that it was actually developed with the help of the IFC and the World Bank Group. The first guideline. The other guidelines we're also working on is on how to integrate ESG issues in the institutional investors' decision-making process, especially the pension administrators. And it's something that is being done with them. We're doing workshops with them in order to understand how we take these best practices that are implemented around the world in the Colombian context. And last but not least was around tools. As Rafael also mentioned, we still don't understand very well how risk, the climate related financial risks, we really don't understand them really well. Everybody and the supervisors that are in the NGFS are testing these new tools and with the data we have. So we didn't want to stay behind, and we believe, and that's why it's part of our working plan, is to start testing and using different tools to measure and analyze and assess the impact of climate-related risk in the financial system. And that's what we're currently working on those 4 aspects. We believe that in the future, and with the results with this first phase of work, we can start identifying which things need to become part of our supervisory management system and which things are just left to the market to do on their own. And that's where we're at.
Fantastic. Thank you so much, Mariana. I think it's really exciting to hear from another super regulator. We have a small number of SBN members that are super regulators and are covering all parts of the financial sector. South Africa is another one of these, and Indonesia. And we've also seen a very market level approach from China starting to expand beyond banks. I think what you say is extremely important about how having that market level approach and being able to engage with all market players, you get a sense of the huge amounts of capacity building that is required. And we hear this in all markets, is capacity building never stops, awareness raising never stops. It's about creating, initially it starts with this policy signal and a unified vision, which is great because it inspires people, it gives them a sense that this is important to the market, it sets out the roadmap. But very quickly we see that our members move towards much more complex and mature roadmaps with the development of guidelines, like you say, with the development of ESG disclosure frameworks, starting to build capacity of institutional investors. In South Africa, it's now embedded in the regulatory requirements of the institutional investors that they consider ESG risks, and then that has a market impact by the institutional investors then requiring that data from asset managers. You also said something else very interesting around the relationship between definition and data. And I think as we move back to some of the questions that we'll ask to the panelists to elaborate, for those on the call who might still be struggling with the term taxonomy and how that relates to disclosure requirements, taxonomy is now something that's taking off like wildfire across markets related to green finance. And specifically in the context of green finance, it answers the question, what is in and what is out? Which projects, which assets qualify as green and therefore could much more quickly be packaged in a green bond or another green instrument. So that is the primary goal of a taxonomy. And then there's the linkage to disclosure, which for a long time, like Mariana says, disclosure has been around for a while, but the market really hasn't done much with that disclosure. And so there hasn't been an incentive for really good disclosure by the real sector and by financial institutions. But we're starting to see with things like sustainability-linked loans, and one example is BNP Paribas has started to pioneer these loans. They did one in South Africa earlier this year. We also have good disclosure in South Africa. And because of that, BNP Paribas was quickly able to sift out which were the good disclosures versus the poor disclosures. And they targeted a local company, motor company called Motus, with a sustainability-linked loan. BNP Paribas wanted to add more green companies to their portfolio because they see that as an added value. And so they used the disclosure to identify that Motus was committed to particular sustainability metrics and goals. So they approached them with a sustainability-linked loan. And this is just one example of how, yes, we need taxonomies to help issue green bonds, to know which projects qualify, and we need better disclosure to understand market-level climate risks. But we're starting to see many other things come out of these improved taxonomy and disclosure initiatives. So with that, I'd like to go back to Jose Manuel to talk a little bit about how the leadership role that the EU has taken on taxonomy development. So that was one of the first things that the EU did after introducing its Sustainable Finance Action Plan, was this comprehensive engagement with market experts on a very exhaustive, comprehensive list of eligible projects and sectors, plus the standards that an investor or bank would use to ensure that it meets the requirements of green finance. Can you talk a little bit about how it's currently being used and what you see as the larger potential? How do you see it impacting both the EU and beyond?
Yeah, sure. Can you hear me? Yeah. Okay. Thanks, Luis, for the question. I agree that the taxonomy and the disclosures are important together, and this, from a point of view, will be an important catalyst all the green finance and transformation. That is here. I remember the first discussion in the G20 groups, and there has been some try in order to build a global taxonomy, and it was a complete failure because it's completely impossible to put an agreement on every jurisdiction. Instead of that, what happened in the market is basically that a lot of private initiatives rise, and you have several initiatives in order to develop some kind of taxonomy. This creates a lot of fragmentation with the standards, and this creates some risk of greenwashing. What happened with the taxonomy is that, okay, European Union tried to build this one with an engagement with the private sector, with a very pragmatical point of view, trying to reach some consensus on the first area when you can establish what is green, what is not green. And once that you have covered this one, that will be gradual. We still have not covered the sixth category of what will be sustainable or not. You will have a catalyst, a common ground, and you will have, as you mentioned, it will be easier to launch new products, to build new products that clearly are credible, and you will not have this risk of greenwashing. At the same time, you will provide information to the public, and it will be more standardization on this information. I agree that the TCFD has been a great achievement, but you still have to fix a lot of these requirements, and this is what will came with the disclosure requirements from the European Union, trying to build more concrete on these disclosure requirements. What will be the implication for the other jurisdictions? I think that this taxonomy and disclosure will help in order to create real asset class on green in the European market. I don't think that this will be a general or a global benchmark, but I think that the framework created in the European Union will be very useful for the jurisdiction. As you mentioned, it's not a question of really copy and paste and translate complete the taxonomy, but the framework that has been created, the way of building this framework will be a good first step in order to adapt to other jurisdictions. If this will happen in this way, I think that it will be easier to adapt this as a class to several jurisdictions and to create a better framework for the investment, for the investors, and a better framework for the risk analysts in order to take into account these characteristics on sustainability. Then I think that clearly this is going to help to clarify the situation with a lot of frameworks that are different. That you need to know about climate initiatives, about several groups that create their own requirements. This will clarify and unify a lot of them. And one thing that I have not clear is if this will expand or not to other issues related with ESG. That is, I have that all these advances we created on the environmental side, but I have not completely clear is that this is going to be possible to adapt to other aspects of ESG, like the social side. It's one thing that I think that this has different characteristics, and we still have to see it's completely easy to implement or to use all this experience with the environmental side to the social side of the sustainability. I will stop here.
Fantastic. Thank you very much. Yes, you touched on some of the exciting questions and issues that are coming up through the application of taxonomies. And Mariana also touched on it, that yes, it's not necessarily a copy and paste exercise to take from the EU taxonomy and simply adopt that in emerging markets. But I think what Mariana pointed out is that it has principles, it has a structure. We're starting to see how something like this, what the structure of a taxonomy looks like and what it needs to contain. In South Africa, we're going through a very similar process to Colombia. We're looking at what the other standards are out there and seeing what is needed specifically for South African context. We're a mining intensive country, and we also have a strong emphasis on social, like you point out. The EU taxonomy is great because it at least has the social safeguards, the minimum social safeguards embedded as a requirement to even qualify for a green asset. That's great. But as you say, in the domain of environmental and social risk management, there are quite an established technical body of work to what are the social risks that need to be managed for these types of projects. It was very easy for IFC to issue green bonds when it started doing that about 10 years ago, because we had that risk management basis. We were very fortunate to already have that in the portfolio. And like you say, there's also a drive from international investors to see more social impact. What are the social impacts, and should that social impact come from the green assets, or must it be an entirely different asset class? So that's very interesting. And I think in Colombia and South Africa, what we'll see is kind of a mix and match, and then take what's useful from the EU and then build up and then add what is particular from our markets that we can then offer to other markets. So I'm going to go in the order that the speakers are originally presented. So I have a question for Dr. Del Villar to tell us a little bit more about really the motivations. What has driven the Central Bank of Mexico to support the greening of the Mexican financial system? What is the strongest driver pushing you, and what do you see as the next frontiers?
Again, thank you very much, Luis. Would like to, if I may, make just a brief remark on this taxonomy discussion that very interesting comments by Jose Manuel and by yourself and by Mariana. So just to give you an example of why this global taxonomy does not necessarily work, and this is something that Jose Manuel very much touched upon it. Let me give you 3 examples. One is invernaderos. It's green, closed farms, that are with a roof, and when our Agricultural Development Bank looked into this and argued with the Europeans that this was a green agriculture in Mexico, they had to convince the Europeans that the way this indoors closed agriculture is done in Mexico does not require CO2 emissions for heating. So we were not these invernaderos are done without the requirements of heating, as is a necessity in Europe, and therefore it is a green activity in Mexico, but not necessarily a green activity in Europe. So that's one example. Another example is, for instance, in public transportation, what we call, I think I'm not sure all over Latin America, but at least in Mexico we call Metrobus. It's like a cheap alternative to the subway, to the metro. No, that has much more difficulty in financing. This, of course, as we know, subways are 100% electric, and so if you get that electricity also from renewable energy, you have to be green. No, but the point I'm trying to make is that this innovation in public transportation that is coming from Latin America, needs to be standardized, and so because we are not there yet. Different cities in Mexico Republic have different standards and have different, so we would need to work carefully on some standards for this public transportation system, and having done that, I think it will be very interesting for European institutional investors to come down and buy, whatever green bonds we issue with this public transportation. No, so that just wanted to also another example has to do with buildings, with housing. I mean, the requirements for housing in Mexico are very different in different parts of the country. And we have cold places, but we have also extremely warm places. And so you cannot look into and sort of copy paste an European housing standard for Mexico. That wouldn't make any sense. So sorry for this long deviation in the introduction. So why has Banco de Mexico moved into this? It has moved out of a clear awareness, a consciousness that these long-term risks that the economy is facing can be a significant risk to the financial system and to the financial stability. And one of the goals that Banco de Mexico has is the sound functioning of the financial system. And sound functioning of the financial system means in few words that the financial system should work efficiently. And to do that, the financial system should look at all types of risks and opportunities that it is facing. And if we are blind to a significant risk, that is what I was sort of trying to emphasize, the transition risk, then the development of the financial system is not sound. So it's interesting that this Committee on Sustainable Finance, which is part of the very powerful Financial Stability Council of the country, that our authorities have decided to create this committee in the first place, because it is a reflection that our authorities at the highest level in the country are pretty well aware of the fact that these risks are very, very relevant. So yes, and Mariana explained it very well. I think we are not at the stage yet of saying that, or we haven't been at the stage yet of saying to financial institutions, do this, do that, you know. So we have started with some regulations, for instance, in the pension fund, ESG requirements starting in 2021, at the end of 2021. So we are starting, but we are very much carefully looking into this issue, no, and into going, as I stress, hand by hand with private financial entities in the country. And one point that I also, and I finish with this, is also related to taxonomy. Coming from a country which has been pretty much reliant on fossil fuels, I think the relevant question is for us be probably how to incentivize companies, corporates to move in the right direction. So it's not a question of necessarily of asking whether corporates are green to some definition, abstract definition, but what I think is more relevant for the planet also is how we move emerging markets towards a path of reduction of pollution, of greenhouse gas emissions, of sustainable water management. So the question is really of incentives, and so when we are talking about taxonomy, when we are talking about disclosure, I think we have to keep that very much in mind, that it is not something to give to say, oh my goodness, you are green, so here is your medal because you're nice, I'll give you this this medal because you are so wonderful. No, it's convincing those heavy polluters to adopt new technologies, new ways of producing that are more friendly with the environment, even though it's difficult to envisage a steel company in the coming years becoming a green activity. No, we still need steel. We still need plastics, that is not to say that certain activities will have to be closed down. No, so I don't know when, but probably coal mines have their days numbered. No, there are, and the reason why their days are numbered is not only because we are concerned about the environment, but also because there are other technologies that are competitive with, say, producing electricity, like renewables, particularly in my country. So thank you very much, Luis.
Thank you very much. That was a very comprehensive answer. And I think it brings us back to the theme for today's webinar, which is the Ctrl Alt Delete and our opportunity to reset in a way. And there was some interest in seeing some of the questions coming in from the discussion. And I know Marcelo will do the formal Q&A, but kind of reflecting on some of the things coming in, this, you know, one always asks, well, is this something we can afford to do, like this focus on green finance? But in fact, what we're seeing is you can't afford not to do it. And the report that we recently published called Necessary Ambition covers 11 countries, low-income countries in the Sustainable Banking Network that are moving quite quickly ahead. And we have 8 country profiles that viewers can go and look in detail to see very practical initiatives driven by need. And the COVID pandemic has highlighted vulnerabilities in our economies, and they've also shown how those vulnerabilities, if there's a change, like a pandemic, and climate change will be in the next change that comes up, biodiversity loss will be the next change that comes up. When these shifts happen, we start to see which parts of the market are most quickly affected, and that affects the assets and pension funds. It affects the non-performing loans in a bank's portfolio. So when BNP Paribas talks about identifying sustainable businesses that they want to, those are the types of clientele they want to cultivate, is to reduce risk and to increase their opportunities. And I really like what you said about sound functioning of the financial system means looking at all risks and opportunities. So the last formal question to Mariana, and this question relates to the current priorities of the SFC in the program Greening the Financial System for Colombia. And we do have some questions coming in already showing an interest in the consultation that you're doing on the new green bond guidelines. You've talked about the survey that you did of the market. You've talked about institutional investors, promoting green bond issuance, the development of a taxonomy, and the need for ongoing capacity building. So can you, maybe reflecting on some of the discussion so far, what would you rank as your 2 to 3 top priorities to focus on in the coming years?
I think, I mean, all of them, I think, are necessary to pave that road that we need to pave in order to be able to put on board all the institutions and the framework, right? Because with the necessary conditions, there always going to be a little bit of caution and a little bit of sometimes, depending on the firm, precaution, regarding on how to approach these issues if they don't have certain ideas or certain concepts or certain instruments and tools clear. So I think all of them are necessary, but in terms of what the order by which, or the order in which I am approaching the work plan, we started with the taxonomy. We have been working hand in hand actually with the IFC team and the other government institutions to move forward this agenda, this initiative. It's a very ambitious initiative. We knew since the beginning that it was going to take a lot of effort, not only because we needed to put mainly public agencies in line with what was happening in the world, that it was more, if you may say it, targeted at the financial system. So we need to put other institutions that don't necessarily know what the bank needs or what an insurance company wants in line and in the same division. So in terms of priorities, we started with the taxonomy and the green bond guidelines. I think this is key again, because it's not only going to help us with the market, to organize the market and to promote this market, the growth of this market in the long term, but it's also because eventually it's going to help us from a prudential perspective, from all the prudential supervisions we do. I think in order to measure and to understand the risk differentials of these assets, we need to have common definitions. So because of its importance and its complexity, we started with the taxonomy and the green bond guidelines, which at the end of the day, it's the instrument that we're going to use to implement, to kind of formalize the taxonomy for the financial system. I think the second most important is regarding the capacity building, especially for the institutional investors. As I mentioned in the beginning, in the Colombian, but as most of you know, the current discussion and most of the power to change actually how the real economy works lays on the big institutional investors. So that was the second most important priority, and it's the current one. Obviously, we expect the second semester, starting first semester this year, to also work on the disclosure, because without disclosure, the great disclosure, the institutional investors cannot start implementing all the ideas we're currently pouring into them through these workshops. So.
Fantastic. Thank you so much, Mariana. We're going to be watching you with great interest, because we have, I think, as I mentioned, we've seen a lot of movement across the SBN network. We've seen the Central Bank of Philippines has introduced policies. We've seen the ASEAN, the Association of Southeast Asian Nations, is moving forward with their collaborative sustainable finance roadmap. And then South Africa, Colombia, and Georgia are following very similar pathways in terms of promoting green finance through taxonomies and disclosure. So it's always good to see what's happening as it's happening and seeing if we can cross-fertilize. So someone who helps us do that is Marcela Pons, who's the champion for SBN and with the Green Banking Academy. She's IFC's Financial Institutions Group Climate Finance Lead for Latin America and the Caribbean. And she has done amazing work over the last number of years in supporting local regulators and banking associations to move forward on this topic. So Marcela, I have the privilege of handing over to you for the Q&A.
Thank you, Luis, and thank you to Mariana, Rafaela. I think this has been a great panel. We have some questions from the public. I have to say that it's great to have the perspective of developed and developing countries here, because that's the first question that we got from the audience. And the question is how less advanced economies can embrace green financial banking, whereas basic needs are not yet covered. So in other words, how much will it cost for a country to have this journey towards a transformation to a green banking sector? So I don't know if maybe I can start with Rafael, maybe if you can give us the first ideas of how would you address that?
Thank you, Marcela. Good to see you again, and thank you for the question. Definitely. You know, we always like to take the low-hanging fruit first, no? And so we should, coming from an emerging market, we should try to identify where the low-hanging fruit is. And well, what do I mean by low-hanging fruit? I mean that there are certain activities that are country specific. I'm not trying to generalize this, but there are certain activities that are in a cost benefit analysis, much cheaper to green than others activities. No, for instance, energy, transportation, even agriculture in my country. They have been identified by our INEC, our Instituto Nacional de Ecología y Cambio Climático, our Ecology and Climate Change Institute in Mexico. It's not a financial institute in any way, no, but they have been looking into the issue of how in the cheapest way possible, how to meet the national determined contributions that Mexico has committed to. So in that spirit, they have looked into the issue of looking at this, what I call low-hanging fruit. And they have come up with very clear numbers. I'm not trying to present those numbers here, but just to give you a rough flavor of them, that if you look at, for instance, energy, so electricity production, you can produce renewable energy, electricity in the country today, cheaper than you can do it even with legacy technologies, fossil fuels. The technological improvements in the last 12 years have been so dramatic in this field that we can now even produce more cheaply electricity from renewables than by fossil fuels. So that's an example. Transportation, they identified also significant savings, so which brings me, and I finish here, which brings me to the point that we should be looking in the country into what is it that it is our comparative advantage. I mean, in what is it that Mexico has a comparative advantage? And so I'm going to say something, I don't expect anybody to agree with me or anything, but I would say that Mexico's comparative advantage, given these numbers of our Ecology and Climate Change Institute, is quickly changing towards from being a fossil fuel producer to becoming a solar and wind exploiter. I don't know if I said, I don't even know if that word exists. So what I'm trying to say is we have to look carefully in the country to what is it that we have as comparative advantages. And those things are changing quite dramatically. And so being an emerging market does not mean that we do not have significant opportunities in greening. Sorry for taking too long.
Thank you very much, Rafael. I think that's great. We don't have much more time, unfortunately, for the Q&A, but maybe I would like to hear a little bit from Jose Manuel as well, and see if you have any other perspective based on your experience from a developed country on how you see those processes taking place in emerging markets.
Well, yes, just a quick comment on that. That is, I think, as Serrano mentioned, that it's critical to provide a framework. It's critical to do this building capacity inside of the authorities, and also take into account that this process of developing a climate risk assessment is very difficult for big institutions, so it will be even more difficult for small institutions. Then you should try to help all these small institutions trying to implement how to manage all these risks, and this is one area that we clearly have to improve and has to take into account that this is a new area that should be developed, and for example, to integrate all this taxonomy, this proportionality at the beginning is going to be required only for big companies, but at some moment your target is that everyone will take this risk analysis and will incorporate into their decisions. Then you need to support and to help all these small institutions. Just with this comment. Thanks a lot.
Thank you, Jose Manuel. Maybe squeeze one last question, and I'll just hand it over back to Luis. But this is for Mariana, because I think that based on the work that Colombia is doing on the taxonomy, it might make sense to include this question. So, Gracia asks in the quick Q&A, what about the climate bonds initiative as an example of a standardization or taxonomy for green public transportation? I don't think that we need to focus on the green public transportation, but I think it would be great to have your views, Mariana, on the CBI taxonomy.
Thank you, Marcela, for that question. I think what CBI did in order to develop this taxonomy was a great first approach, like a market accepted standardization of certain activities. But one of the things, again, we have realized and understood that is needed, I think, at least regionally or ideally, but initially in each country or jurisdiction, is again to have that local context, to have to integrate what's happening in the local markets, what it's done in the local markets, and how it should be interpreted. So I think for us in our process and the process we're using to develop the taxonomy, what we did was actually start from there, start and understand what CBI had done, what the European Union had actually, how the IFC and the banks that have issued their green bonds classified and selected. From there, we start doing and start identifying the work we need to do and classifying those activities and those sectors that are, as Rafael mentioned, are low-hanging fruits that we can actually implement directly, but then map out those activities and those sectors that needed a local work from the ground up to understand how it was done locally, how it should, the approach, and how it works in the country. So again, to summarize, the CBI gives a first great approach. Their methodology actually helped us develop our own methodology locally to develop a taxonomy, and it's used as the baseline to identify those activities that are already useful for the country, and that's those activities that we actually need to do more work on.
Thank you so much, Mariana, and thank you, Rafaela and Jose Manuel. This was, as I said before, a very interesting panel, and I think all the views are very important for our audience that is thinking how we can advance in this green finance agenda. And I think that all the ideas, progress, initiatives that all the three countries have are very relevant to Latin America and any other regions also connected here. Thank you so much, and I hand it over back to you, Luis, for the conclusions.
Thanks, Marcela. And I won't take long. I think we've highlighted many of the key takeaways. Again, I really liked what Rafael said about, you know, what each of these regulators, central banks and super regulator, in the case of Colombia, are doing is really working to this common vision of a sound functioning of the financial system, bring it to where it should be, to include all the risks and all the opportunities. And the moment we find ourselves in with the COVID pandemic has sent shockwaves and is going to require massive efforts to rebuild. And it is our moment. It's our moment to rebuild in a green way, We did a similar webinar with Kenya earlier this week. They call it the Kairos Moment, the Greek term for an opportunity. This is really a perfect opportunity because so much work has been done by SBN members, by NGFS members, by the Task Force on Climate-Related Financial Disclosures. The time is actually perfect to reinvent the financial systems, to reboot. And so with that, I'm going to hand over to Carlos to close us off. Thank you, everyone. Thank you to the speakers. It's been a privilege to moderate you.
Thank you so much, Luis, and thank you to our panelists and to our audience on this. Since we're we have surpassed the time. I'm just going to thank everyone here. I'm going to announce that we are going to have our 12th webinar on August 13th, and this will be 2030, how today's biggest trends will collide and reshape the future of everything. It's going to be a very, very interesting one, and it will be with Professor Mauro Guillén of the International Management School at Wharton University. So with this, I close this webinar. It's fundamental and key, the role of central bank supervisors and regulators to tackle the major risk identified in the World Economic Forum, which is climate risk. Thank you very much, and see you in our next webinar.
Thank you, Carlos.
Thank you, Carlos. Thanks, everyone.
Thank you.
Thank you.
Bye.